Hello students, welcome to Legacy IAS Academy. In today's video, we are going to discuss about a term that has been making the news headlines for past few days, that is yen carry trade. Now this yen carry trade is also believed to be the major region which has triggered a global stock market, we can say crash or fall. So let us try to understand in this context what do we mean by this term. So first of all, to give you a brief background on the topic, recently major stock markets across the world, whether it is the US market, European market, Asian market or even the index market in India, they have experienced their sharpest decline in decades. For example, in a single day, Nikkei, which is we can say similar to the Sensex of India in Japan, it witnessed a fall of more than 15 to 18%. So while there was no paucity of region, obviously there are a lot of factors that are at play here, that being probability of recession, economic recession in the United States after the new job data and employment data came into picture there. Apart from that, we also have geopolitical tensions that is going on everywhere, especially after the killing of Hamas leader by in the Iran, which Iran has said that has been carried out, the assassination has been carried out by Israel. So a possibility of a larger Israel-Iran war, already the Russia-Ukraine war is ongoing, and many countries across the world, including a neighbor Bangladesh, is witnessing a geopolitical and we can say domestic disturbances. So all these regions are there, but the main region, or we can say a new global trigger that has caused a global stock market turmoil, is believed to be what we can call as the unwinding of the yen carry trade. So let us try to understand that what basically this term means. Now basically, first of all, before understanding yen carry trade, yen basically, again to give you this information about, it is a currency of Japan. So let us try to understand in simple term what do we mean by the carry trade. So we know that all across the world, the investors who are not limited to one market, who can be termed as a global investor, who basically invest in different asset classes across emerging markets and developing markets and developed countries. So these investors are always looking for opportunities to make the money. Now one way how they are able to make money is they borrow money, or we can say money is nothing but a capital. So they borrow capital in a country where interest rates are low. That means if you borrow capital from a country where interest rates are low, obviously finally when you repay your amount, loan amount, you will have to pay relatively lesser amount of interest. So the interest rates are low, and then invest that money after converting the currency in the country where the interest rates are much higher. And due to this, since the interest rates are much higher, if you invest in those countries, you will get much higher return on your capital. So you pay a small interest on in the country where you have borrowed the money from, and you get higher interest in the country where you have invested. And this spread, we can say the interest rate spread, is basically the profit that these investors pocket. So why it is possible, especially with reference to Japan? Now central banks of different countries, including Central Bank of Japan, US and RBI of India, for example, they try to keep the interest rates at a level that suits their domestic economic condition. For example, in some countries where you have a high risk of inflation, interest rate can be lower. In some countries where there is a high risk of recession, their interest rate need to be decreased. So based on what kind of economic situation is brewing and going on in a particular country, the interest rate is decided by the respective central bank. Now, if we try to understand this by taking example of Japan, because we are talking about here particularly about the yen carry trade. So Japan's central bank, which is also called as the Bank of Japan, it historically has kept interest rate very low, even going to the negative territory and sometimes close to zero. So the rates were at 0% between 2011 to 16, and in fact the Bank of Japan, they have pushed the interest rate even to below zero, that is minus 0.10% since 2016. Now what is the consequence of this? For example, if you borrow 100,000 in Japan, and if interest rate is minus 0.10%, finally the money that you will pay after the maturity of this debt will be lesser than the money you have actually borrowed. So that is what makes Japanese market very much interesting, and similarly it makes borrowing in yen much more interesting and much more, we can say, profitable for the traders or the investors. So the idea behind this low interest rate, Why Japan has kept interest rate to such a low level and even going to the negative territory? Because basically it wanted to stimulate the economic activity. Because if interest rate or borrowing rate is less, more and more people will borrow the money from the banks, financial institutions, and then this money will be used for consumption. This consumption expenditure can then help to drive the economy by boosting the demand of the commodities and also services. So that was the reason or logic behind this kind of rate by the Bank of Japan. However, investors took advantage of this. They borrow yen at Japan's low interest rate, then convert the yen to another currency. This can be dollar, this can be Chinese renminbi, this can be euro or pound, and invest in the higher yielding asset classes elsewhere. Now, these asset classes does not have to be restricted to currency only. These can go as long as this can go as wide as being in the bond, in the stocks, or even in the real estates in countries with higher interest rate, whether it is US, India or China, for example. Now, the example of this yen carry trade we can try to understand from this particular diagram. Now, suppose in the beginning you have borrowed 10 million we can say yen from the Japan. Now, as you know that interest rate, let us suppose that interest rate in Japan that prevails here is 0.4% per annum. So, you have borrowed about 10 million yen. Now, suppose this 10 million yen is equal to about 83,000 US dollar if you use the currency conversion. Now, let us suppose you have a capital of 83,333 US dollar, and now you have invested in dollars, and in US market the dollars are giving you yield of, let us say, 5% per annum. That means at the end of year, this $83,333 that you have borrowed from the Japanese market in the yen has given you a total return of roughly $4,000, and now your capital has become $87,500. Again, you convert this $87,500 in the terms of 120 yen per dollar, it becomes about 10.5 million yen. Now, imagine, now try to understand this. The 10 million that you have borrowed with the 0.4% per annum of interest, finally the total capital or total debt that you have to repay here is only 10.4 million. So, this extra 460,000 yen that you got because of this interest rate difference is actually your profit, and this was something that was being done over a period of time. This is just one example of money market. Same thing, rather than investing in money market, if you invest in the equity classes of different countries, for example, you talk about Indian stock market, if someone did the same thing, invested in Indian stock market, then in last 1 year India's Nifty has given a return of more than 15 to 18%. So, obviously, this profit margin will become much more higher. So, that is how the investors have taken the risk. They have borrowed a huge amount of sum from the Japanese market into the yen, converted into local currencies of different countries, and has generated a handsome profit on this capital, repaying a very less of this we can say this very less of this interest which they receive in the form of debt. Now, if try to understand about that, what is the impact of this carry trade? Now, first of all, why the investors are going and buying yen? So, the first reason is Japan, we know, is the third largest economy in the world, and that is why the currency of Japan, that is yen, is trusted by many of the investors. If suppose we take any such a country which is having a very poor economy, and no matter how much is interest rate there, investors will not flock to this country because they do not trust that how long the value of the currency of this country can be maintained. So, such low interest rate incentivize investors to borrow cheaply in yen and invest in the other countries, and largely these countries where investment was done is Brazil, Mexico, India, and even the US in a bid to earn the better returns. Now, Bank of Japan continue to keep interest rates so low as far as they can. It did not budge even when the central banks across the world has rapidly raised their interest rate, especially 2 years back when the Russia-Ukraine war started. Even at that time, Bank of Japan has kept their interest rate steady, and that has made it much more interesting for the investors to go and borrow from there, because it then became much more cheaper as compared to other countries. It incentivized billions of dollars of yen carry trades, and these borrowings fueled investment in several countries across the world. And obviously, if the stock market boom or investment boom is happening due to a single factor, single region, if any changes happen in those factors, it can cause a catastrophe in the market, and that is something that we are seeing. Basically, what has changed recently is in the last quarter, that is between mid-March to mid-July, the Bank of Japan has raised the interest rate by 35 basis point. That means now interest rate is 0.25% instead of negative 0.1% earlier. Now, this seems to be a very less extent of rise, but especially from an Indian perspective to look here, lending rates are upward of 6.5%. So, 6.5% in India and 0.25% in Japan. So, Japan is still very cheap as compared to India as far as the borrowing cost is concerned. This may not look like a massive increase obviously, but in the Japan's context, this is a significant change, it is a tectonic shift, and it is nothing but what we can equate with the monetary earthquake that has been brought in the economy. So, what's worse, not only that the recent increase we have seen in the interest rate by Bank of Japan, it is expected that Bank of Japan will do away with making the or keeping the interest rate at a lower level, rather they may go for a raising of interest rate even further in the coming future. So, that has triggered basically a shift in the mindset of the investors, and the sharp reversal increase that has happened in the interest rate led to what we can call as the unwinding of the yen carry trade. So, basically unwinding, what it means that the investors who had earlier borrowed in yen and invested in, let us say, Brazilian, Mexican or Indian rupees, now they are selling their assets in international market because their profit margin will be reduced, and also they cannot be sure that how long this interest rate will also Japan able to maintain. So, it is these regions that have triggered a massive sell-off in the stock markets all across the globe, and that is why the stock markets of all the countries including India has been bleeding in past 2-3 days. That is all for this particular video. Thank you very much.